Good morning, traders and investor. Roger Scott here, Senior Strategist for Trading Pub. Now, it's Monday. It's August 28th. It's about 7:49 in the morning. Before we get into this video, I want to remind you, please like and subscribe to our channel. We just rebranded the channel. It used to be the Wealth Press YouTube channel. Now it's the Roger Scott YouTube channel. That's where I post these videos there. If you can't find it, go to youtube.com/Roger-Scott. It's the Roger Scott YouTube channel now. It's the same channel. Just my channel, just been rebranded, nothing different. Make sure to like and subscribe to our channel. Make sure to subscribe to our Telegram channel. I post free picks there. You'd be nuts not to subscribe to it. It's rogerscott.com/Telegram, or you could see the link above or below this video. Lastly, most importantly, I've opened up my VIP room for the summer. Yay! No cost, premium product. I'll see you there at noon Eastern time, Monday through Wednesday at noon, Thursday and Friday at 11 a.m., and it's the link is either above or below this video, and you can also find it below each video in the YouTube channel. Now let's get into all of this stuff. We got a lot to talk about today. So as you can see here, the Nasdaq, the Dow is up about 78 points. The Nasdaq is up 45. Honestly, with all the volatility we've seen, this is randomness. This is not a major move. The bond market is still suppressed. Now here's the deal. I want to see the bond market either break higher above this level right here, or I want the bond market to break below this level right here. I want to see it trade above the 97.41 or the 94 level, which is pretty close. Unless it breaks the 94 level, it could stay here for quite some time, and I really have no interest in holding onto the bond market or anything else while it's not doing anything. So I'd really like to see it rally above the 97.50 level or break the 94 level. If it breaks the 94 level, I'm pretty confident that it's going to break down and actually not just test this low, but break down. But a lot of what we're talking about has to do with what happens this week, and I'll explain to you why. We have a very heavy week for multiple reasons. We've got the Consumer Confidence Report. We've got the JOLTS survey. You've got the ADP Employment Report, which has been completely out of whack the last several months. You've got the biggest GDP, the biggest report of the quarter showing us how inflation is doing. This will impact Fed a lot, which is why I say you got to keep an eye on the bond market. Beyond that, you've got jobless claims, which is going to be a nothing burger. You got personal income. That'll be interesting. Employment situations, which will be the big report, a bunch of Fed speakers, and construction, ISM, and PMI. It's going to be a big week. On top of everything I just said, oh boy, you've got earnings, nothing really today, and it's coming down to the end, but you got Best Buy tomorrow, you got Big Lots, you still have consumer discretionary and tech, HPQ, NEO, Pinduoduo, yes, Pinduoduo. And then Wednesday, you've got a big daddy, Salesforce. This is a huge retail and tech stock because Salesforce is a huge company and it's used very widely. You got Chewy, you got CrowdStrike, you got Five Below, Okta. Thursday, you've got Dell Computers. The chart was looking fantastic last week. Then you've got Academy Sports and Outdoor. I love the store. I love shopping there, actually. Dollar General, Hormel. So you've got a lot of earnings coming out, and here's the implied volatility. You could see what the expected move on each one of the big stocks that are coming out. Now, I'm sharing this with you, and if you subscribe to my Telegram channel, I post this there. That's right, rogerscott.com/Telegram. Subscribe, and subscribe again. So looking at the SPY is very choppy with a downwards bias. I'd like to see it break above the 450 level if you're looking at the SPY, or the 430 level to the downside. Until we break one of these levels, we're going to be very choppy. I'm seeing more chop right now. Again, for the QQQ, we need to break above 374.15 or break below right here, this level right here, the 354 level. On the SMH, I hope you're writing this down. On the SMH, very volatile. This puppy is volatile because of NVIDIA last week. But again, look at what it's doing. And this looks like a shoulder, a head, and a shoulder. Remember, these are not objective patterns. But to me, this looks like a head and two shoulders. And this looks like the neckline. And if we break this neckline, and I think we will, I'm pretty sure we will, if we break the 143, we're going to go all the way down right here to 130. And NVIDIA, I mean, it's been huffing, it's been puffing, but that looks like a peak top. Now, I've said it before, but it literally went right up here and closed below the previous high, and now it's below that level. So I think we're going to go down right here to the 400 on NVIDIA. Matter of fact, let me go ahead and put that right there. I think NVIDIA is going to go down. Now, we could rally from here, but I just don't see it. I don't think there's any further strength. So we're right now in a position where we have to deal with a lot of uncertainty and a lot of choppiness, especially with the fact that earnings are behind us for the most part. And revenue was not that good. So let's talk a little bit about fundamentals, and then I'll talk about all the sectors we're watching, what's strong, what's weak, all the opportunities ahead, and how to trade this week. So market participants are looking ahead to the release of the Fed's favorite inflation gauge while awaiting Friday's non-farm payroll. They're talking about right here, the GDP report. And they're not going to get growth at 2%, and that could really impact the bond market. So keep an eye on that. Watch that closely. Again, I'm going back and forth. I'm trying to give you a three-dimensional picture. Data on Friday showed that the University of Michigan gauge of consumer sentiment wasn't very good in August, weaker than the expectation, but the year ahead expectation was stronger. So one was consumer sentiment right now is weaker, but they're expecting things to get better. Speaking of better, Mr. Squirrely Powell, I told you he was going to be close to the vest this time. He was going to be fairly accurate. He wasn't going to be mumbo jumbo. He said very clearly, described the recent decline in inflation as a positive development, but also emphasized that it remains too high. We are prepared to raise rates further if appropriate, and intend to hold policy as a restrictive level until we're confident that inflation moving sustainably down towards our objective. Well, I'm going to tell you something right now. We have zero confidence right now in our economy not doing that. So, in our economy doing that. So, from what I'm gathering, yes, he's not saying we're going to raise rates. He's saying we're going to raise rates. You know what I'm saying? Meanwhile, U.S. futures are now pricing in almost a 20% probability of a rate hike in September. Don't think it's going to happen. But now there's a 51% chance of one in November, and I think it is going to happen. And I think this number is going to increase. And as this number increases, it'll push the market lower because it puts more pressure on the economy. I don't know what got into our head thinking that interest rates are going to go down. I honestly don't. Could it have been Powell last quarter? We don't talk about that. Europe, tracking Friday's gains on Wall Street and rally in Asia after China announced measures to support its ailing stock market. Don't hold your breath. Tech and construction stocks led gains on Monday. ECB President Lagarde said Friday that ECB will set interest rates at a sufficient restricted level for as long as necessary to achieve the 2% medium-term target. Same thing as Powell. China closed higher following the government's reduction of stamp duty on stock trades. Yes, stamp duty on stock trades is going to live. That's our answer. Stamp duty on stock trades. I'm rolling my eyes right now. Making it the first reduction since 2008, a commitment to slowing down the pace of initial public offerings. I'm holding my breath. Japan closed sharply higher, primarily driven by gains in industrial, real estate, and energy shares as investors opted to buy back stocks following losers at the end of previous week. Basically, nothing great is happening. 3M got upgraded. Industrial stocks, keep an eye on industrial stocks. J-Bill got upgraded. Tech stocks, another tech got downgraded. CrowdStrike got downgraded 2%. And NVIDIA got upgraded, but it really doesn't seem like it's doing all that much pre-open. It's up 17 ticks on an upgrade, okay? Now, think about if NVIDIA got upgraded 4 months ago, right? You see how the sentiment is moving away from AI. And as I mentioned, you've got a lot of earnings this week, but most of them, they're nothing today. You got it tomorrow. Watch out for BBY, NEO, and SJM and PDD. Then you got Chewy. Well, I'll send you all this and we'll talk about it in the VIP room later today. Now, looking at my medium-term volatility and all of the goodies that we're seeing right now, energy, healthcare, utilities is making a comeback in light of everything else going down. Retail and home builders are still in the worst spot. Russell 2000, consumer discretion, mid-caps. Means smaller stocks, mid-caps, Russell 2000, hello, over the last 3 weeks. Home builders, retail, do you see where this is? Most of what we're seeing here, aside from technology, thank you, NVIDIA, last week for distorting this whole chart, but energy, healthcare, utilities, S&P 500, industrial, this is where I would stay. Late last week, we've seen technology, QQQ, consumer discretionary, but over the average, they've been down here. Now, let's look at the chart so we can actually look at it. Energy looks like it's making a comeback. Energy could potentially come back to the 90 level on the XLE. Healthcare looks like it's choppy to upper right now. It looks like it's bottomed out. SPY looks like it's going to go up a little bit at the beginning of the week. Dow Industrial looks like it could be bottoming out. Things look like they could be bottoming out, but not really moving higher. Means consolidation and more congestion. Technology does not look good. I don't like this bar right here. It looks like it's coming down. Financials looks like they could be moving back sideways, at least for the time being. Be careful with the QQQ. Be really careful with the QQQ. Consumer staples actually looks like it's bottomed out. Matter of fact, let me take a look at consumer staples on a momentum level and see where they're at. Yeah, 5%. There's just not a lot of downside here. There's not a lot of downside. Let me look at it on a longer term basis, on a 200-day. Yeah, it doesn't look like there's a little bit more, but not a lot more. So consumer staples, I like consumer staples. I think they could have been bottomed out, but I'd like to see some flight to the upside. I don't like real estate. I don't like consumer discretionary. I don't like the Russell. I don't like the retail. Home builders will have to wait and see. But I really like energy right now. I really like consumer staples. I think consumer staples could be starting to make a move. But that's about it. Energy and consumer staples and maybe healthcare. But be careful. Be careful this week. I'll highlight everything and we'll have more idea of how things stand. Remember, it's a very interest rate sensitive week. You've got consumer confidence, retail sector. You've got earnings on retail. You've got GDP. At best, I think we're gonna be choppy on the SPY. At worst, we're gonna go back down. I would need to see some real strong evidence before, and I'd like to see the 450 level broken to the upside. And on the Dow, I want to see I'll tell you what my level is on the Dow. I want to see us going back to 35,700, above 35,700. Till we do, very choppy. 35,700, definitely right here. The next major level is at 35,000, and then 35,700. That's what I want to see. If I don't see the Dow going up to 35,000 or 350, if you're looking at the DIA, but it's 35,000 on the Dow, not going to be all that happy about the stock market. So be really cautious. Now, what day trading stock do I have for you today? Just one, Hawaiian Electrical. It's down again like crazy in the morning. Here, let me show you extended hours. You could see how it's been doing. This is the daily chart. Now, the stock is right now it gapped up. So if you look at it on a short-term basis, it gapped up. But it doesn't look, to me, like there's anything to support it right here. There's a lot of resistance. So I'm going to tell you how to trade this puppy right now. What I want to see is this. I want to see the stock. I want to see the stock trade below the $12 level. Now, if it gets to the $12 level, before the opening bell, which it could because it's at 12.55, I want it to break the pre-opening low. So if the pre-opening low is at 11.50, then below 11.50. So look at it on an extended, pull it up here and look at it on the extended range and look at the pre-open low. I want to take out the pre-open low, and I only want to trade the stock to the downside because it's a crappy stock. And no, I don't think it's going to break out and start making all-time highs. No, this is not the next Apple computer. Take it easy. Sit down and relax. So right now it's 12.14. I want to see it trade below 12. Again, if between now and the opening bell, you still have 90 minutes, it trades below 12, whatever that level is. Give it another 5 cents. So if the low is 11.50, you want to short at 11.45. If the low pre-open is 11.30, you want to short at 11.20. Give yourself 5 cents below the morning low. Right now, the morning low is at 12.15, so I'm just saying $12 just to give you an idea. But I only want to short it, and I want to cover it above the high of the swing high, okay? So short it on the day low and cover it on the day high. And don't look back. I think the sucker's going to break down. Before I let you go, folks, my top secret project, predetermined payouts, it's finally ready. And I'm going to reveal it today No, tomorrow, Tuesday, not today, tomorrow at 1 p.m. Eastern time on Tuesday. It's a brand new way for everyone to see the back-tested success rate of every single trade before you enter. And since June 1st, my trades have reeled in a blistering 63% average return. That's including winners and losers with an 89% win rate. Now, what are we? We're in August right now. Since June 1st, we've had an 89% win rate. It's crazy. It may sound crazy, but it's all thanks to a new discovery I called modified options. That's right. Click the link below to save your seat for 1 p.m. tomorrow, 1 p.m. Eastern time, right after my VIP room, and I'll fill you in on all of the details. I even have a $1,400 surprise lined up for 30 lucky traders. I'll see you guys tomorrow on Tuesday. Have a great day. Subscribe to my Telegram channel, like these videos, and remember we rebranded the channel from the Wealth Press channel since we changed our name to the Roger Scott channel. Bye, guys. I'll see you soon. Have a great day. Bye. Send me emails, support@marketgeeks.com. Bye.